Good evening from Lagos, Nigeria, and thank you so much for joining us on this edition of Capital Market. I'm Temple Ashaju. Now, it's no longer news that the National Bureau of Statistics this week released the 2016 fourth quarter GDP estimates alongside the full year GDP report. Now, the data showed economic output declined in real terms for the fourth consecutive quarter by 1.3% year-on-year in the fourth quarter of the year, much in line with analysts' projection of 1.2% and bringing the full-year GDP growth to 1.5% year-on-year, and the nation's first annual GDP contraction in 25 years. For most analysts, the outlook for growth in the financial year 2017 is more optimistic, as some of the structural factors that influence Nigeria's business cycle, such as oil production, oil prices, and policy making, now seem to be getting some substantial improvement from the people that matter, if you like. But while we'll note the effects of this GDP report on the earnings of companies released so far in the Nigerian stock market, we'll take a look now at the market's performance in February and examine the significance of the Eurobond listings in both the Nigerian Stock Exchange and the FMDQ OTC Securities Exchange. That will be our focus this evening, and we'll be joined later on the program by a research analyst who is the head of research at FSDH Merchant Bank. Let me save the name for later. But let's begin the program this evening, and we'll begin with the Nigeria's 1 billion Eurobond dollar, which is listed yesterday on the FMDQ OTC Securities Exchange, where the Debt Management Office unveiled the logo of the bond alongside the registration partners that are involved in the issue. The listing, which has been described as historical, is also believed to be a major solution to Nigeria's infrastructure gaps. But the question is, how involved can the average Nigerian securities trader be on this paper, especially when Nigeria has run short of foreign exchange? After the listings yesterday, I had this chat with the chief executive of the local boss, Mr. Bola Onadele.
And also, the importance starts from the support of this sort of funding to the infrastructure development of the country. And when the economy develops, the GDP grows, and then the capital market will benefit. But more specifically to what DMO has done by ensuring that this particular bond is not only listed on the London Stock Exchange, but listed on Nigerian exchanges, the Nigerian Stock Exchange and FMDQ OTC Securities Exchange. DMO has planted a visionary seed today. One, to ensure the size of the Nigerian capital market increases, because 1 billion has been listed in Nigeria. Two, to pave the way for other corporates to start seeing that, Eurobonds can be listed in Nigeria. Three, for the Nigerian investing community to start seeing the opportunities that will come in the future to them being able to invest dollars in securities issued and listed in Nigeria. So at some point, the Securities and Exchange Commission is also going to encourage Nigerians to float dollar-denominated bonds in Nigeria and look for investors in Nigeria for that bond. And that is what we've nicknamed Afro-Dollar Bond. So if you look at the Eurobond, the bonds in Europe, without jurisdiction or restrictions, it's the same way we've coined this Afro-Dollar market, Afro-Bond market. With Nigeria and South Africa, we're well positioned to develop investing community here, where securities denominated in dollars can be issued in Nigeria, and you can have investors all over the world invest in those securities. So it's a big step, it's a visionary seed that all of us have to tap into. And we're counting on the support of the Securities and Exchange Commission to lead this initiative. DMO has done this as a precursor to most of the things we expect, and we think it's just the beginning for Nigeria.
So some people have argued that, look, we have few dealers or traders on dollar-denominated bonds in Nigeria and in Africa at large. And this is also coming at a time when we have dollar scarcity, except for the fact that now it seems like we're beginning to have a light at the end of the tunnel when it comes to dollar, and that's just because of the fact that these bonds are being being floated, and now we are now getting more proceeds in dollar. But the fact that we have scarcity and we have few traders that deal on it, what does this bring to mind?
You know, it's interesting you say that. When I was a dealer in 1991 with Citibank in Nigeria here, the total DOM account balances in Nigeria was less than $1 billion, probably $500 million. Now it has grown to $6 billion. There's no scarcity of these funds in terms of investing liquidity. We're not talking of the FX market, which is the buy and sell. We're talking about people just like you have your Naira deposits and you want to invest. We're talking of dollar deposits. And it has grown to $6 billion in this country. At some point, that will keep growing. The more we issue securities there and get Nigerians to invest there, they will not move the dollars abroad. So the economy is growing. The dollar flows in the country will be growing. The FX market is actually meant to complement all this. By the time, and the central bank is working hard on that, the right FX market structure is activated in this country, you will see more than the potential of Nigeria. If Egypt has had inflows of $9 billion, I think Nigeria is going to have beyond $20 billion. And the central bank is positioned doing that work. So let us separate the investment pool of dollars from the FX market, which is the buy and sell. So I think the illiquidity you're talking about is in the FX market. In the investment pool, it is growing over the years and it will continue to grow. And things like this will bring, you know, the liquidity to this economy, because if a dollar bond is listed in Nigeria, registered by SEC and listed on FMDQ OTC, people, Nigerians outside, investors who like the, you know, issue would invest, and dollars will flow to Nigeria. You know, the new world is about capital flowing, and there's a lot of dollars all over the world at the moment. So it is what we do strategically that's going to bring capital, be it people or international flows, to Nigeria.
That's the Chief Executive of FMDQ OTC Securities Exchange, Mr. Bola Onodele. And one of the registration partners to the issue is Stanbic IBTC and Standard Chartered Bank. Now, according to the Chief Executive of Stanbic IBTC, Mr. Yinka Sani, the Eurobond listing poses so much advantage to his financial